Hi guys, so today I wanted to quickly go through two things. One is risk off and risk on trades, and also a couple of the pound pairs. So we'll start with risk off and risk on, and just look at the different ways price moves on certain markets and how they move together. And also it is important that when you see risk off and risk on moves happen in the market, just to wait at least a day or two just to see if it's a full-on sentiment change or it was just a fake manufactured news related move which then reverses out, which we saw last Friday and then this Monday of this week. So if we start off with risk off, so in risk off you have yen being bought, gold being bought, and risk sort of currencies such as the Aussie and the Kiwi being sold, and equities being sold as well. And then it's the opposite for risk on. Last Friday we saw risk off move following some news, and on the Monday it reversed. So let's just take a look through 4 charts and show the movement when there's risk off and risk on. So during risk off on Friday, this is the US 30 Dow Jones. We saw equities sold quite heavily here. And then it closed on Friday, and on the open the following week or this week, we saw a gap here. Now this is an exhaustion gap. So that is your first sign that this move here, which happened on Friday, is manufactured and could be a fake move. And not long after that exhaustion gap, so small amount of selling and price bounced back as buyers came in strongly. So this is risk on here. Now as we move to the yen chart, same movement. Friday, risk off, yen gets bought. So yen being bought means dollar yen falls. So sellers come in here on dollar yen. Market open this week, exhaustion gap, and because of this fake move, risk on, buyers came back in strongly. So dollar yen got bought, and which means yen got sold. Gold is the next chart. This was the risk off move on Friday, exhaustion gap, final push by buyers, and then risk on, gold getting sold. And the last chart is the Australian dollar. So during risk off, Aussie tends to get sold, which we saw right here. Not as much selling, but there was a selling move. There's an exhaustion gap. Last push by sellers, which is exhaustion here, and then risk on, Aussie got bought back again. So just be careful when these moves happen. Give it a bit of time to see if it's full-on sentiment change. Otherwise, you get caught in between, and you lose money on trades, which then start reversing back on you. So that's risk off, risk on. Now I just want to talk through a couple of the pound charts. Start with pound Aussie. We've seen a push up by buyers here on the daily chart, and we did highlight this move a couple of weeks back. Now pound Kiwi as well, similar sort of move, a bit of a stronger move here. Now why I chose these two charts is just wanted to break down because this is a cross chart, just wanted to break down each component of the chart and compare to the dollar and understand why these moves happen. So it's not really so much about pound strength, it's to do with the nature of the other currencies. So if we start with the pound dollar, we have seen pound dollar move up, but it has been a bit of a struggle here. This is not, to me, this is not a complete sort of, we're going to see a full-on reversal there. So it has moved up, which has helped the cross pairs move up. But if you go into the Australian dollar, you can see it's just been in a boring, narrow, consolidated range. So while the Australian dollar consolidates and stays in the range and pound slowly moves up, that of course leads to pound Aussie moving up. And New Zealand dollar, we've seen Kiwi being sold. So this being sold heavily and pound moving up slowly, we saw that stronger move on pound Kiwi. So just be careful when obviously you trade these moves, but just be careful and be wary and understand why the move is happening. And I think with these two pairs, we're getting close to the daily phase 2 move before a possible continuation to the upside.
Alright guys, following on from Atif's video last week, where he highlighted two opportunities falling into daily phase twos, pound Aussie, pound Kiwi. Today we took advantage of pound Aussie on the 1 hour time frame, which reached over 100 points. Price formed a low and then into a first lower high, bearish price action, rejecting the 20 moving average, which is where we like to take a lot of our positions from, and off it went nearly 100 points. There was a very similar opportunity on pound Kiwi, where we saw, again, similar price action form and a nice drop from the pound this morning. Across most of the other pound cross pairs, we saw very, very similar moves. So it's all taken into consideration what we're seeing on the daily time frames, how these currencies are pairing up in terms of strength, weakness, and also against the dollar, and putting it all together into a strategy. Moving forward, there's going to be lots of opportunities throughout September. It's usually a good month. We still have our eye on US indices, the US 30 in particular. We identified the treble bottom in last week's video, and we have seen the market progress to the upside. So look for continued buying across not just the US 30, but all US indices. As well as indices, we're also looking at a lot of the yen cross pairs being so low on the chart. So tons of opportunities for September. August finished fantastic, 1,406 pips over 37 trades. So of course in September we'll look to beat August's record. We're also hosting a lot of events across the next couple of months. We have workshops, live trading days, courses, programs for you guys to meet us and join us, spend a bit of time on our trading floor also. So if you have any questions or would like to meet the team, then drop us a message or get in contact.